Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, December 21st, and our final intraday webinar for the year. Guys, it's great to be with you. DJ, Mark, Pete, Tom's in the room. Great to be with you guys this morning. So there's a whole lot of chop out there. We're heading into the holiday season, the holiday lull, as it were. Has started a little bit early here. There are still some pairs in play, which are on the move, but we're seeing some intraday price action that isn't all that inspiring. So A, you want to lower your leverage. We talked about this yesterday. And B, just be nimble. You know, it's not worth it to really get stuck in a big position heading into these thin liquidity conditions and the end of the year. That said, we will go over today the DXY. Obviously, it made a dip below support, came back, and kind of holding here, just straddling the support at 93.36. We'll talk about that in a moment. Euro dollar, Aussie dollar, update on Aussie yen and Euro Aussie from last night as well. Dollar yen keeps rallying. I didn't jump into a short again, but I was tempted to. It broke through that level again last night. We're trading well above 113 at this point. So we'll take a look at what the dollar yen levels look like heading into the close. Kiwi dollar, pound Oz, and pound Kiwi. Just an update on both of those. And then we'll take a look at gold. Any other questions or trade setups you'd like to review? Something that you didn't hear mentioned, or a question that you do have at any time? Feel free to throw them on the message board, guys. You know the deal. All right. Well, heading into the close of the year, I do want to, take a look at some weekly charts as well. I'll give you some longer term views as we head out into the open of 2018. As it starts right now, did you mention dollar CAD, says Tom? I didn't, and I seem to be leaving that out every day, don't I? I'm not really focused on it just because it's just holding these resistance levels. I really don't know how to play it right now, Tom, but we'll definitely take a look, no problem. The weekly chart on CAD is important too, heading to the close of the year. So actually, that'd be a good one to take a look at as well. You're more than welcome, sir. Okay, so DXY. Before we get started, here's the DXY looked like, all week long. The focus has been on a break of the support structure. You can see right here on the right, 93.36. You have the 100-day moving average. You had 50% retracement. You have longer term slope. Even if you go to the weekly chart, this slope right here is sort of governing the lows, right? So the median line itself, you also have the 200-week moving average and the 100-day moving average. There's a whole bunch of stuff loaded right here, okay? Just below that, the 2016 low day close. And that's going to be sort of where we want to see the break. If you note that the monthly open for December is right there as well at 93. So that's sort of the line in the sand to really get resumption. Keeping in mind on its face, guys, the monthly opening range low is right at that 618 retracement of the advance from the lows that we made for the year, 92.59. That's exactly where the December 1st low was. So yes, the first threshold or sort of hurdle, let's call it, is 93. Monthly open, 2016 low day close. We've seen some pivots there already, but it's really the 92.60 break that would give you the conviction for an all-out reversal lower in the greenback. So that's sort of where we're stuck at. Here's what the intraday charts look like earlier in the week, and right now they're still pretty ugly. The basic play for us last week was the break below this ascending channel. This came on FOMC. Turned from a beautiful spot, massive resistance right here, 94.14, 94.23, and that gave us the downside bias. Took out the first two targets, 93.36 was support, and as we started the week, again, we noted the critical nature of that support. So what happened? Well, it broke below here yesterday, and it looked convincing, and now we've recovered, and we're sort of straddling the same level. Here's what it looks like now. Here's a 240-minute chart. There's the 120. So what do you do with that? Well, if you're holding short still, I wouldn't want to get scared out of them. But for new entries here, I mean, you like to see when these levels break for there to be an acceleration. This looked like the onset of an acceleration. 93 also completes, guys, 100% extension. So even if we're wrong and this isn't a more concerted high, even if this is just correctionary, you would still expect that drop into 93, 93.09. So I'm still inclined to look for that move. Again, we're heading into these thin liquidity conditions into the market close for the holidays. So I don't want to get super stubborn on it, but all things held equal, we're looking for that stretch into 93. It's a pretty big threshold. There's a lot there. And would certainly bode well for that reversal off 94.20 we saw last week. So a little foggy here on the dollar index, but the levels are still the levels, okay? We want to see a settle below 93.36 to open up US trade. Ultimately, that 93 option should really give us a little bit more of a tell. Questions on the index. The weekly chart. Again, watch this week's close, okay? If we close well beyond the confines of that median line, basically below 93, that would be the conviction play for the continuation lower. If we close, we still have tomorrow's trade session, but I doubt that we'll get a push through 93.89. If we do, then we were wrong on that being the high. At that point, you'd need to look for that stretch near 95.90, basically the 96 handle. Not the favorite scenario, but that's the implications of a close above 93.80 this week. All right, everybody clear on this? Should be an interesting start of the year. Okay, recall that, I guess it was last year. It's a pretty weak start to the open of the year. We typically talk about how gold prices typically see a really strong January, February crossover. The implications of that would be pushing dollar lower. Doesn't necessarily have to materialize, but that would certainly fuel the flame. So it's going to be interesting to see how we open the year. But as it stands right now, broader bearish invalidation. This trade remains bearish below 95.90. And that's just based on the slope that we've been following for the last 3 some odd years. Okay, that's the dollar index heading into 2018, number 1. Number 2, here's what euro looks like. A little tricky on the play here. I guess here's what it looked like last night on the update for the euro. The level that had me concerned was the November high day close, 119.98. Recall in the earlier update, that was sort of our line in the sand as resistance. A newly added pitchfork. I don't know if this pitchfork is in play, but the 50 line saw perfect touches. I think we put this together here in the webinar yesterday. The upper 50 line, again, saw some perfect resistance before the break, saw acceleration. And the upper median line parallel converged, not only in the 100% extension, 1882, but 1898 was the November high day close. So a good spot if you were going to see some resistance in the euro for us to get a little kickback. Note, aside from all of that, the November high day close, the 100% extension, also nestled in that region is actually the monthly open for December. It comes in right around 119. So maybe a pip above that. So if we were going to get a pullback, that's where I would expect to get it. It's a bullish trade. We've been looking to play the long side of the euro, but certainly we need to clear this formation. So at risk for a pullback off this region, largely I'd be looking for a pullback to get back on the long side. Here's what it looks like now. Resistance has been holding. You did get a kickback. The low that we just spiked was 1850, so a nice little 40 pip run off the highs there. Look, I'm looking for re-entry. So I'm looking for an exhaustion low. That could be it. I don't know. I'd have to see the US Open, but let me just see if there's anything significant. Is it 236 is right there. $18.38, $18.33. So I think you can get a little deeper of a cut here. Ideally back into like this pivot region to get the long exposure. But long story short, if we do breach the highs, you're still facing 94.47, 94.65, huge region of resistance. Again, the daily chart highlights that as well. You have basic trendline resistance here and very light two touch, so I'm not going to stress it, but this is the big Bahama Mama, 1967, 1977. Once we clear this route, you're basically looking at the yearly high day close and 2167 on the upside. But right now, the initial focus is on this resistance pivot. If it breaks through, look for that rally towards 1965, 1977. On the pullback, again, we're looking for exhaustion. We're looking for a long entry well above the median line. So no change to any of those levels on the euro so far heading to the close of the week. Any questions on euro? Still think you're at risk for a little bit of a pullback here. Looking to fade that drop for another push higher. So that is number 2 on this session. Euro dollar. Number 3, Aussie. Well, it was a great trade ever for the last, I guess, for the majority of the month. It was a beautiful trade. It's been stuck in this super tight range since the start of the week. Obviously, you guys know I told you I bailed out of the long position midweek as this thing continued kind of to fail here into 76.80s. Didn't get back in. Here's the push, okay? Don't get too excited yet. We're breaking through the weekly opening range highs, but look where last week's high converges. Right on those slopes, right around, let's call it basically the 87 handle. Okay, you have the upper median line parallel for the ascending formation we've been following, and then you got the 50 line. Here's the 240 minute. Zoom out a little bit for you. For the current downside formation that we've been in. Right there. So that's your first sort of push or first ceiling to take a note of, right into that 77 handle. Beyond that, you're basically looking for 77.40. Nice pivot in price. Former swing highs from back here, September of 2016. Former swing highs, 38.2 retracement. Nice region to target on the way up. Also note the 200-day moving average, right, is basically in the ceiling right here as well. Same 50 line. So look for a reaction there. Near-term support, 76.30. That's the only thing that would put me a little bit more hesitant to take any long exposure. If you were to break below that, you look for support somewhere down here on the lower parallel. Right now it's like 75.80. But all things held constant above 76.30, we are looking higher in Aussie. Questions on Aussie? I knew I'd regret getting out of that long position at some point, but there was just nothing really compelling to put me in again. I've been looking for another long position ever since, or long entry at least. Let's see how we react here into near-term resistance. That is Aussie dollar. Number 3, questions, comments, concerns. Okay, so I forgot to tell you guys earlier in the session, we did get the release of US GDP. The third read on third quarter GDP did see a downtick. So 3.3 was the read that we were running with on the second revision. We were expecting that to hold at 3.3. It did get a downtick to 3.2, so slightly softer than expected. Same thing with the core PCE, so the core personal consumption expenditure, that was expected to hold at 1.4%. It came down to 1.3. So some of this soft data today may help the dollar, or may help the dollar cross his push against the dollar, i.e. Aussie higher, Euro higher, etc. But I don't necessarily see anything in the data here today that's going to be a major shift in policy. If anything, the passage of the tax proposal from the new administration does seem to be, favored by the markets. Obviously, it's inflationary. It's going to give us that little extra fiscal push. So, I take that little downtick in GDP with a grain of salt today. Hi, can I just have an ideal stop for the euro dollar, please? 1994, too far for me. Initially, I set it at 1904. I'm in a short exposure at 1880 since yesterday. Okay, so let's take a look at euro again for you. You're in a short from 1880, man. That's where you're short from. You gotta stop at 1904, 1945. Yeah, I mean, it depends what type of position you're trying to do with that. On the trade you're holding right now, I actually would be sticking with that 1904 stop that you have. Listen, you're trading, this is obviously a stretch higher, right? So we're trading against the near-term trend, obviously. I do think you get a bigger bounce to the downside here against that, just because of the technical considerations that are up there, right? The monthly open, the high day close, trendline resistance, the 100% extension, lower the upper median line parallel. Yeah, so you could get a kickback from there. On a scalp like that, where you're trading it real tight against the trend, yeah, I wouldn't have a stop anywhere beyond 1904 on that. If it breaks, you're absolutely right. 1965 would be way too big of a stop for me, or even 1945 for that matter. So I would play and take it for whatever it can give you, E-Man. If you can get a move down to the lower parallel, I really don't think you get that low, but if you get a move down to the former opening range high for the week, like 1830 or so, I'd be just bailing on that position. Keep in mind, again, pretty big support is still down here. You have the 100-day moving average. Again, that slope that we've been pivoting off of all last couple of months. On the intraday chart, it has former swing lows, former swing highs. It's basically the 118 handle. Does that help you, man? On a near-term trade like that, I would have a pretty tight stop. Yeah, 1904 sounds pretty good. Thanks, just playing the pullback. Yep, and I'm all about it. I'm all about that kind of trading. I do it all the time. We just got to be super nimble. You don't ever want to put a stop in somewhere like a 30, 40 pip stop when you're trying to play a pullback at that juncture. That's the mistake a lot of traders do. We have to recognize the risk, right? So putting a tight stop on it, if it works, great. If not, slap on the wrist and move on. Okay. So that is Euro and Aussie. Any questions on Aussie? The one thing we didn't talk about with the Aussie is just the weekly chart. And again, to keep things in perspective, heading into the end of the year, this is the last webinar for us here. So I just wanted to highlight this, guys. Keep your eyes on this weekly chart. We'll still be providing updates, by the way, on the daily updates on the intraday page and the swing trades. But this is something we'll be watching, right? If we're able to close above this slope again, it certainly, in my mind, would have us looking towards that final breakout at 77.50. That's really what's needed to put the long trade back in play, essentially. Beautiful turn where we turned. Beautiful reversal candle. I have the 52-week moving average right now, which we pushed through. That's still at 76.40 at this point. It popped up a little bit from 76.30. And, I want to see a weekly close right above that. That would give us the conviction further that we may have a more concerted low in place here for Aussie. But the weekly chart's going to be critical. Everything looks pretty good, right? It bounced right at 40 more or less as far as momentum is concerned, right at support. Just need to break back above this to make that low more important. Questions on Aussie? All right, a quick segue into Aussie yen, which is pushing into some near-term resistance targets as well. So here's what Aussie yen looks like now. Here's what it looked like last night. The thing that was sort of on my mind was this median line formation that we've been following. Recall that we were looking for a turn lower as we were heading into the resistance level here, but it popped. Once 86 broke, this thing just went right through all the upside targets. We noted last night the upside median parallel was just above the 87 handle. You got that tick, and then he pulled off. But the point being is this thing has still got legs. Look at the daily chart. Here's the magnitude of that breakout above 86.50. It was pretty big. So ultimately, I am looking for a stretch into 87.66, 87.64. Right now, at this point, today's focus will be whether we can clear that 100-day moving average on a closed basis. If we do, great, still looking higher. If we don't, or if it starts to fail, your bullish invalidation level is still going to be at 86.50. So even on the pullback, we'd want to see some support into that region. Here's what the intraday chart looks like now. Here's what it looked like last night. Again, probed right into that 87 handle right here. Next upside target, 87.30. Okay, it's the 50% near-term retracement. The 50% long-term retracement is still up there at 87.64. And that's what's reflected on the daily chart. You also have a 1618 extension off the low there as well. So nice confluence region there to watch. But still looks good. Immediate support 86.50, 86.60. Bullish invalidation. You have to leave room for a possible drop right back into former resistance as support. I don't think, again, on this type of momentum, I don't think necessarily you get that. But I always have to highlight where the risk is for you guys. So just know that that's sort of where I would change my opinion. As it stands, 86.50, 86.60 still going to be our focus is higher while above. You know, right here, right now, there's nothing to do if you're not long already. You could get a near-term pullback to give you the opportunity to get back long again. But I wouldn't be executing any new trades at this level. Questions on Aussie yen. Now, this shouldn't be surprising. The yen is kind of falling out of bed in general. Dollar yen just ripped higher. You know, even more so overnight than I thought it was. So it looks like yen weakness is further throwing gas on this trade. But all things held equal, levels remain unchanged from last night. Okay, sticking with the Aussie theme, number 5, we're going to run Euro Aus. So here's Euro Aus. We warned that there could be some near-term exhaustion as we were heading into this resistance level here. So I was looking for a stretch into 55.46 for possible exhaustion, and now I thought would have been a really decent short entry just off the median line there for a move lower. This ended up actually being the high. You made a run on overnight again, but it couldn't even max that high. And then it failed and pulled back. So as far as trying to get a new position here on Euro Aussie, again, market conditions, guys, just remember when we're trading. Here's the turnaround. We didn't quite get entry on that 55.46 level. There's the turnaround. There's the first target already at 54.28. So, you know, nothing to do here. Again, unfortunately, guys, we're sitting exactly mid-weekly range. Here's your weekly low. Here's your weekly high. You can't kind of jump into position from here. If you got the fade opportunity and you jumped to the gun here and you jumped into the short against the high, here I would be taking something off. Have to trade off, bring stops to break even. Your next target is just at the median line. I wouldn't wait all the way to the weekly open. I'd kind of pull it above 53.70 or so. But that would be your next target on the downside for Euro Aus. So with Euro trading into resistance, could see a pullback, right? With Aussie essentially looking for the break higher into resistance, you could see a scenario where maybe Euro Aussie still has a little bit further downside to go before moving. The broader picture for Euro Aussie, by the way, guys, is bullish. You know, I do like this long term. I think you made it a super significant low last year, or this year rather, in February. I really do think this has much more upside to go on whole. But right now, obviously, the risk is still for a little bit of a drop lower. Questions on Euro Aussie? Interesting cross that we've been tracking for the last couple of weeks. That's number 5. Number 6 is, I guess we should just do it and get it out of the way, rip it off like a Band-Aid. Here's the abomination for you. So this formation ended up not to be in play. We added this a couple of days ago. Recall yesterday I told you I took a short here at confluence resistance. You had the 618 of that range to the pitchfork on the decline. You had a 618 retracement and a 38 and a 236 other retracement of the advance, all giving us that confluence along former trendline support and now resistance. So obviously the short didn't work out. It only pulled back 20 pips or so before ripping through. You know, we've been looking for exhaustion again here for a short trigger. You never got it. And now we're breaking through. So I'm starting to lose efficacy. I don't want to stare at this extension or pitchfork any longer. We're going to have to look for price action to give us a little bit more clarity before we take any further action on this, guys. All you need to do with this is look at the daily and weekly charts. This thing is as basic as it gets in that you're in a clear-cut range. So first, the weekly charts. Okay, this is the whole year since April. Boom, 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 boom. Now here's where things got interesting, and when you might have seen me put this chart yesterday on Daily FX, the focus for next year, or I guess the focus heading into the yearly open, the immediate focus is either a rally northbound of 1430 or a near-term breakdown below 112, essentially 111.90s. You have the 200 and 100-day moving averages converging right down here. So a break below this, look for the range lows. A breach above here not only breaks the range that we've been in, but also a basic trendline resistance off the highs. One touch, two touch, three touch confirms. So the breakout above this level would be technically significant. Such a scenario, you'd be looking for the yearly open at 116.97, and obviously key resistance there into 120, 121. But the emphasis is on a break above that to give us that bullish bias. So for me, dollar yen, guys, the abomination, the focus heading to the end of the year is just this range. Literally, it's 230 pip range. That's all that we'll be looking for near-term guidance. Like I said, a downside break, look for this thing to drop into the range lows. A topside breach really changes the picture and shifts the medium-term focus more aggressively to the upside in dollar yen. So with that picture in mind, 1430, 112, that's the range that we need to break. Near term, the daily picture had us working with this slope. Obviously, that slope extended off the October lows, caught the highs perfectly for the pullback. What do you do here? What do you do? For me, I'm looking to see if we get that stretch into 1430 for a short again. Otherwise, there's nothing to do here either on dollar yen, unfortunately. Here's the intraday charts. It's not the cleanest thing, but maybe that's something to work with here. Anyway, 1380 near-term resistance, 1430 critical key resistance on dollar yen. That's the big player. All right, enough of the abomination. Any questions on this before I move on? Kiwi dollar number 7 looks like this. The Kiwi, I was looking for a little bit more of a pullback. Again, stupid range conditions are right back into play. So, big resistance level that we came off of 70.37. We're looking to play the pullback ideally again for a long entry off 69.45 is what I wrote in the report. Obviously, again, we drifted lower and turned just ahead, holiday trading, whatever. Here we go. We missed the trade again, and we're still holding the weekly opening range. So this one's pretty basic. There's really not much to do until we break the weekly opening range. Am I going to leave this slope on? I don't really want to stress it to you guys, but if this breakout is legit, you still have a stretch into 70.40. It's another 30 pips, but you're already off the, any type of conviction stop on this. So I do think you could swing a little bit higher. Here's what it looks like on a daily chart, back into that key resistance range. But again, don't want to take a long here into resistance with a stop down here is way too big. So maybe another exhaustion trade on a push into this region. If we push higher into 70.77, remember you got a whole host of moving averages just higher. A basic 38.2 of the decline still comes in at 70.77. So wouldn't be surprised to see that rally into that region. But that's really still the emphasis on a break above that for this thing to really correct. Otherwise, we're still trading in this broad descending formation. No change to that on Kiwi. Just a major area of support that we came off of longer term. You guys have seen this chart on the weekly, right? Last year's open, the opening range lows for this year. That's what we're defending. Key emphasis is still on this region right here. And again, 70.77, that parallel lines up with those levels that we're just looking at. So key resistance still on hand here for Kiwi dollar. That is number 7. Number 8, pound Oz and some of the pound crosses that we've been following. So here's pound Aussie, I guess, on the weekly. But the focus for us on pound Oz, was here. So you remember we started the week saying, look, we're at support. We have a very key and very objective weekly opening range taking shape just above support, resistance at 76, bearish invalidation, resistance at 75, bearish invalidation was 76 right here. So this I thought was going to be a decent one. If we did see a sell-off in the Aussie, or the Aussie at least correct a little lower, I thought this would have been a nice stretch for another entry for the short side at 76 for the move lower. Obviously, the weekly opening range, we highlighted that. We've been watching it since the weekly open. Here's the valid break. So right now on this drop, you still should be looking for a stretch into 73.47, 73.46. That's the November open and the 50% retracement of the entire advance off the lows. Oops. Okay, stretch a little bit lower, so 73.40, let's call it. So I'm still looking for a drop into that region here. And a break below this would be a clearance of the objective monthly opening range. Remember that the opening range for the month low was here. We cracked it again here, or we tested it again here. Here was the break. And here was the test of the former monthly opening range lows as resistance. Resistance, the break below the weekly opening range low, really puts the emphasis on a push below that 73.46 to open up a much larger leg lower. You'd be looking for 71.87 in that scenario. You'd be looking for a move down to the 2017 open. That's down at 71.19, 71.20. So this is the last ditch effort. If this uptrend is going to hold, that's the last ditch effort. Below 73.40, sayonara. There's plenty of downside room. And while I do like the Aussie long, I don't want to get too aggressive on the sterling short. So that's just a caveat I'm putting out there, right? I do think the Aussie strength could drive this, but I don't want to get too heavily exposed on a pound short. So I think this is one I would be interested in. On the short side of pound. Pound Kiwi made that break. So here's what pound Kiwi looks like. We've been following this as well. Remember, this broke below that trend line support from August already. And we were looking again for the recovery here to give us a short off 93.50. Again, blow off just ahead of that. 92.65 is the high. We turned around. This one's still within its weekly opening range. So still looking for a slip down in support near 188.20. I think you get a better long exposure there. But simple range, not much to do there on pound key. Last but not least is gold. And then we'll jump into your questions. I haven't forgotten about that dollar CAD question for you, Tom. But here's gold real quick first. The near-term resistance levels holding so far, okay? 1267, we talked about how significant that level is, not just from a Fibonacci standpoint, but from a moving average standpoint, a 200-day moving average. On the weekly slope, you also have former trendline support off last year's low as resistance. So off of that major critical support that we rebounded off of, this is the first major hurdle. And I was talking to you guys yesterday about this. We were just probing into the lower parts of this support, former support, now resistance zone. You can see here a little bit more of a stronger rejection. Break below 1263, look to play the correction. I wouldn't necessarily want to play this short, but I would be looking to use that short to get me back a better entry for a long position. Such a scenario, you're basically looking I wouldn't even stress that. Weekly open. is 1253. I knew that looked a little weird. Here's 1253. That's the weekly open. 50% retracement comes in at 1252. That's a really nice pivot in price. Former swing highs, former swing lows. You know, that'd be a perfect re-entry. Again, that'd be a full round trip, so maybe a little bit too aggressive. But just know that we're looking for proof that we can really validate this as a more concrete low in price. Remember, like I said earlier, January, February are typically really strong months for gold. Here's the last 2 Januaries and Februaries, you know, just rips. So if this base is really that important, we highlighted a base last year was the same exact scenario. We were dropping right into the early close. We talked about 1120, 1130 as a critical support structure. The 2014 low of a series of Fibonacci considerations. There was also slope support. Lo and behold, January opened and this thing just ripped right into the first quarter. So I'm not necessarily saying that's going to, you know, happen again, but looks awfully similar to the end of 2016 trade. So I do think, you know, if we clear this to the upside, that would validate a much more significant low is in place. But the obvious threat from here, the immediate threat near term, is for some sort of corrective pullback. Ultimately, you want to see that crack above 1263. Really interesting here on gold. Okay. So back into your questions. Tom wanted to take a look at dollar CAD. Sure. Here's what Loonie looks like. And we tried to use that slope, remember earlier in the week, Tom? It didn't work, didn't stick very well to it, so we kind of trashed that. Here's what it looks like on the weekly chart, or on the daily chart rather, and I will show you dollar CAD on the weekly chart because this is important. Remember, guys, you can take a snapshot of any of the charts that you see presented by clicking on that camera button. So for the weekly charts, for the daily charts, this being the last webinar for the year, if you want to do that, feel free to do that for your own, to review at your own leisure. But you know, the basic emphasis for dollar CAD for the last like 3 months essentially has been either a break above 29.27 for the final extension to resistance, or the downside break below this pivot line off the 2012 lows, which has been so crucial and pivotal, for lack of better words, in so many turns in price. So, you know, that was basically the support structure that we need to see to get the conviction for a continuation lower. We've been butting up against that 50% retracement of the yearly range since October, right? So what I can tell you is that this week, things I'll be looking for is if we're able to make a new low beyond last week's low, so a low sub 127.13, that would constitute an outside weekly reversal off resistance. And that certainly would be welcomed. Okay, we haven't gotten it yet. It's a weekly reversal, but on an outside week. We'd need to make a low beyond the lows we made last week. That would be in a material shift. That would certainly suggest we're moving lower in price. You know, obviously the support break below that longer running 200 week moving average is critical. So that's sort of the idea here with dollar CAD. On whole, the immediate focus heading into the close of the year is this range break right here. Break to the downside, look for resumption. Break to the upside, if you're nimble, intraday guys like me, we can look to play the longs, but ultimately, we'd be looking to establish a new short near the upper parallel. Not the favorite scenario. My favorite scenario is that we turn from here and kind of just break lower. But we'd need to see that push sub 25.80, sub 25.70 to really get the conviction on that move. Here's the daily chart. Okay, why 25.80, why 25.70? Because again, now you have the 100-day moving average sneaking up in there, former swing highs. That would again necessitate a break below that 2012 slope line that we've been talking about. And now that we've made, you know, a concerted reversal, as it were, at least this swing high that we made was a perfect touch, guys. The 50% retracement of the yearly range, and then the 200-day moving average was right there. So if this reversal is legit, we can tack on a quick retracement. See where the levels map out. And if we do that, you can see the 38.2 comes in right at 25.89. So either way you slice it, the levels seem to be mapping up out, or excuse me, the levels all need to be shifting our focus, narrowing down, all seem to be pinpointing this level as being the necessary break to really validate that a high is in place. Also take note, guys, that the objective weekly opening or monthly, opening range low is right there as well. Remember, we never cleared the November opening range low. Here's the November open. Here's the November low. We never cleared it. We tried to break below it earlier this month, but we quickly recovered. So I'll still keep that as sort of the lows that we need to respect. So all of those things that we just talked about would be invalidated with a move below 2580. That's why 2580 for me is so critical. So yeah, I mean, if you put a gun to my head, I'd be more inclined to look lower. The conviction for the turn comes with a break below this threshold. Okay, here's dollar yen, or here's dollar CAD rather, on the intraday charts. There's been a whole lot of chop. It's a simple range below that 50% retracement. So until we clear it, respect the range. Tom, does that make sense? He says, okay, I'm short at the moment from 28.70. So look, you got a decent entry, and I have no problem with playing inside the range, guys. I don't want to shake anyone out of any positions. This is the purpose of this webinar, right? Intraday, real short-term thinking. So I'm all about it, yeah. But my problem is, Tom, is that you're in this market where you're getting some breakouts and you're getting some stretches, and a lot of times traders are trying to front run these stretches, and they take a long in a range or a short in the range, expecting the breakout. My whole emphasis right now is things are not really in that kind of mode, right? So if you're going to play the range, be nimble, clean up the trade at the range lows and clean up the trade at the range highs. You don't necessarily need to close the whole thing, but definitely take a more defensive stance, Tom. So, bring your stops to break even, at least take a little off the trade, put it in your pocket and see if it pulls through. But at the end of the day, the range is the range. He says, I'm sure at the moment from 128.70 from the tiny pin bar 2 days ago, hoping for a breakdown. So I think you're talking about this. And yeah, that was a great tell. And that was off of you essentially caught the exact swing pin off that key resistance. So well done. Beautiful entry. Yeah, I mean, I would just be looking at the range lows, basically. Maybe look to clean up a little bit at that Friday low from last week, 27.12. 26.63 is a soft target I've been working on. That's former swing high from back here in August. But remember 25.80, 25.90. That's sort of the big Bahama Mama. Make sense, Tom? He says, oh, yes. Okay, yes, thanks. Hey, you're more than welcome, sir. Well done on that trade. I like that. A trade that you guys have been requesting about, Kiwi Yen, just to give you a quick synopsis on where that thing is. So the Ripperoo higher obviously went through the major resistance level. We talked about this earlier in the week. 78.17 got clipped. 78.64 got clipped. Got a little hesitation there, but the final target for me was right here at 79.42. That was a big one that we were looking at because look how much was lined up there. You made it now through the 100-day moving average, 200-day moving average, 50% retracement, and the former swing highs from November. All are right here. So look, we're pushing through. If you're holding longs on this, yeah, I wouldn't want to tell you to get out. The next level will be 80.20. That's the 618 key retracement. Former slope support should be near-term resistance. And a big level. Look, the yen is falling out of bed, so this might be a still realistic target for the longs. So take that for what it's worth. I would not try to jump into a long from here or chase this at all, guys. If you're holding longs, like I said, bring your stop up probably to the weekly open, if not the former weekly opening range highs. I'm looking for a final stretch higher here in Kiwi yen. Questions, comments, concerns? All right. Okay, guys. Well, if there are no other questions, if you have any, feel free to throw them on the message board now. If not, I just want to take this opportunity to thank all of you. It's hard to believe that SV Trade Desk is going into its 4th year of operation now. It's been an awesome ride. We have a lot of big projects that we're still working on. I know I've been saying that for a while, but they're pretty intricate. So hopefully we'll have some new stuff lined up for the release in 2018. I want to thank all of you for making this year so special. It really is a pleasure for us to interact with you guys on a daily basis, and really makes this whole project really fun for the both of us. So thank you. I want to wish everyone an awesome, happy, blessed holiday, Merry Christmas, and a very, very happy New Year, guys. I will see you on the flip side of 2018. Blessings to all. And again, best of luck trading. Keep it light. We've had a great year. Let's end on a great note. And I will see you guys in the new year. Same to you, Mark, Peter, Pooja, Steve, Ziad, Iman. Thank you so much. I'll talk to you guys later. Cheers.